Really valuable insight there about how to scale talent and the value, of course, of that talent, not just from a company or a business perspective, but also the region. You know, one scale success is like an echo. Once that team has launched or exited, the talent that incubates is played back in the sense of more fintech firms or more innovation in other parts of the market. So moving from the supply side, supplying talent in, to buying to the buy side now, specifically payments. And we've got a great panel of global institutions and some scaled regional startups looking at the future of cashless in the region. So with that, can I invite my panelists to join me here on stage? Great. So if we could invite Ronit, very good, Jain, Viplav, and Sailesh, who's just joining us now. Again, these sessions are for you as much as they are an enjoyable time for us. So please make sure you ask questions. We'll take photographs at the end. We'll get everybody a photograph at the end. You don't want a staged photo? Good. So we've been hearing a lot this morning about the challenges of scaling businesses. Yesterday we were talking a lot about technology, particularly deeper technologies such as AI and biometrics, and some of the challenges that poses. We're looking more specifically here about payments and the future of payments. And cashless in particular in this region. And we're hearing a lot also about the success and the progress that's been made with alternative payments methods across the region. MasterCard put out a number, something like 9 out of 10 customers in the region have used at least one alternative payment method over the last year. Of course, a one-time use is not the same as needing to use a payment method. So what we want to find out today is really what is the progress that the region is making on that journey to cashless? What are the opportunities? And I think the opportunities element is relevant to those of you that are innovating in the space, whether you're on the institutional or the innovation side. And then what are the challenges and what does the future look like? I think to that end, we've got a wonderful cross-section of the entire world here. Represented in the sense of the payments marketplace, and I think Ronit, you've got the grandest title. I think it says you're global head of the future of finance. So you should know a thing or two, I'm guessing, about the future of financial services in this region and payments. What are you seeing globally? But what else are you seeing? How does this region look in comparison to what you're seeing globally?
Sure. I've only got the grandest title because I made up my title. One of the good things about being in a company as long as I've been is you can just make up your title after a few years, right? So how do I see the future of finance, and how do I see it in this region? So first of all, there are some mega trends, and obviously this panel is about cashlessness, and we're going to be, I suppose, particularly listening to the practitioners talk about how cash is becoming less of a thing. And before we came on stage, we were all joking about who has banknotes in their wallet. Can we go around the panel? Do you have a banknote? Dude, you're not on the panel. Can the guy in the cheap seats please stay quiet? Thank you, Arjun. Who has banknotes in their wallets?
I do.
This guy from Standard Chartered has. Well done.
I don't.
You don't.
I realize that I do.
You do?
Yeah, I do.
What's a banknote?
What's a banknote? Sailesh, do you have a banknote in your? No, proudly digital. And I checked, I have like a 10 dirham. I have one banknote, 10 dirhams. And when I landed in Dubai in 2016 from the UK, my wallet would have been full of banknotes because there were certain parts of the city like DIFC where you could manage without banknotes. There were other parts of the city where you definitely needed banknotes. Like even just going to a park and buying an ice cream for your kids, you needed banknotes. And so I think it's a cliche, but COVID completely changed, not just here in Dubai, everywhere around the world, the need for the COVID and small devices. So like the other thing we were joking about before we came on stage was going to the US. That was the last country in the world where I was to carry banknotes. The GCC, no need. Europe, no need. But the US, you always needed banknotes for taxis, for tips. And that's like the last place in the world I go. It's like literally the only place in the world I carry banknotes. So we've gone cashless. But this doesn't mean that if you are a manufacturer of banknotes, it's a bad business. So this is this kind of dilemma or kind of interesting situation we are. Actually, if you make banknotes, there's still a massive demand for them. It's just not in payments. We don't carry them. We have them hidden under or maybe not us, but people we know, we have them hidden under mattresses, in safe deposit vaults if you live in what used to be called emerging markets in the old days. And I'll just give one number and then I'll shut up. But if you look at banknotes in circulation in India, just because it's a big country, it's not far away from here. And so there's demonetization that happened in India a few years ago, right? Forcibly, some of the largest banknotes got taken out of circulation. And the amount of banknotes in circulation dropped. And given the growth of UPI and real-time payments, the world's largest real-time payment market, you'd think banknotes in India would be low. Yet, if you right now Google RBI stats, Reserve Bank of India stats, banknotes of India in absolute terms and relative to GDP at an all-time high. All-time high, despite the fact that when it comes to digital transactions, India is like a world leader in digital transactions. So that's the future of finance. In one way, it's completely changing. Like we have hardly any banknotes in our wallet. In other ways, some of the existing form factors, they're not going to die. It's a bit like banks. People have been saying to me, banks will die for the last 10 years, 15 years, and we're still around, right? I'm looking at my friend from Standard Chartered. We're still around. So that's the future in my view. Everything changes and some things just don't change.
Everything changes until it really doesn't. Yeah. Jem, I think we were talking about the growth cross-border payments, some of the challenges there. I mean, cross-border payments really are kind of cashless, aren't they? I mean, we don't send physical notes from one market to another to make those payments, but I guess the on and the off ramps are somewhat different. How has the pandemic changed the cross-border landscape?
Yeah. Thank you. Thank you for that question. So I think when we talk about the cashless world, we cannot keep on mentioning payments that keeps time to doing so. So we need instant payments, and instant payments started from the domestic rails. And eventually the money will move around the world. So if you're not going to take the money into your bag and move it physically, you need cross-border payments electronically happening as well. And instant payment is a key term here because maybe just to mention from Swift's perspective, for instance, our mission is to enable instant and frictionless payments account to account anywhere in the world. So this is the ultimate goal of Swift, which has been found by 1973. You may consider it as the oldest fintech on earth, maybe. And there are a couple of key drivers to do that. So the first of all, cross-border payments market is a growing market, especially from low-value payments perspective. And where trends, leading technologies, and the competition has a positive impact on developing new innovations in speeding up the payments, etc. And the second part is the regulators, or mainly the homework given by G20, Financial Stability Board, where by 2027, every G20 country needs to have cross-border payments that are happening in one business day, and 75% of these transactions should happen in less than 1 hour. So this is the key issue that we are dealing with. And as Swift, we started dealing with this by launching Global Payments Innovation, GPI, in 2017. And by GPI, as of today, 90% of cross-border payments are on these rails, where half of the payments are happening end-to-end in less than 5 minutes. But we have a way to go. Although 95% of them are happening less than in 1 day, the issue is that we need to have all of these payments to happen in a day and 75% less than in an hour. So this is the key point that we are also looking after.
that, Jem. Ritesh, I mean, we were talking, you were talking about financial inclusion. There are still big gaps in financial inclusion, aren't there? Payments have been, traditionally, it's the home of innovation, really, when it comes to financial services. Driving more customers in, ultimately means really giving them a payment account. What are you seeing sort of in this region and globally about, how much progress has been made at bringing new customers in, one, and then secondly, also keeping those customers, keeping them transacting? Are you seeing real progress beyond just that first hurdle of getting new customers to start transacting digitally or electronically?
Thank you. Ronit has thrown a significant light on the cash and the cashless. And being a member advisor at the G20 GPFI, which is the Global Partnership for Financial Inclusion, so we have just concluded our 4th meeting, and recently in India as well. And I can tell you, the force is still on. We are talking about the less cash economy rather than the cashless economy. So cash is required in all the economies globally, regardless. You can't get rid of the cash. So far, we are looking at 1.4 billion people who are excluded today. So it's a significant digital divide, right? Now, what are we doing for that? Being a banker, coming from the payments, led the future of payments in the past, we always think around us. But let's be realistic. Cash runs the economies globally. Yes, we can talk that we are running cashless today in GCC. That is possible. But we are talking about we are. We are not talking about the whole society. And that's where the challenge is. So we need to focus on that. And the way forward globally, and there's one way forward that I could see, which is the outcome from the G20 GPFI meetings as well, is that your infrastructure, right? And when I talk about the infrastructure, it's about the DPI, the public infrastructure. So how we can build the public infrastructure that can eradicate the problem to a greater extent and help with the financial inclusion. And let's be realistic, inclusion is not the only challenge. Because even the larger economies can talk about that they have 89% inclusion or 94% inclusion, but let's be realistic. Are those included people are active and are they literate? So the biggest challenge in whole this gamut I see is the financial literacy. And we need to work towards that. In terms of the cash, yes, it has a cost associated with it. So does the digital public infrastructure as well. And fortunately, 30 minutes later, I've got to talk on the financial inclusion more, so we can talk more about that. But globally, what I see, there's a lot more movement on the digital inclusion. I wouldn't say we are going to go cashless even in next 20 years. I might sound pessimistic, but that's a realistic view that I have from the global markets.
And when you say cashless in the next, you're talking globally, are you? Not confined to particular markets or regions?
Yes, I'm talking about globally. And even if we talk about the cashless in the largest regions, whether you talk about US of A or India or any of the largest regions, we are not going cashless for at least next 20 years. And that's what I project. Because the way economies are running, let's be realistic, it's individuals as well as the MSMEs, those who are running the economies, right? Whether we can get them included. So there are multiple forces and the focus from the GPFI perspective or the financial inclusion perspective. It's not only the individual, including the MSMEs as well. So until unless we get inclusion rate and the literacy rate, and that is financial literacy in the 90th degree, we can't really think about going cashless.
Thanks for that, Ritesh. Viplav, let's turn to you, and then Sailesh will come to you from your kind of perspective, which is quite unique given the makeup of the panel here. We heard there Ritesh talking about cash isn't going to go away, that there's a great there's going to be more for it. Ronit was saying the same. We're going to see there's actually more notes in circulation in sort of big emerging markets than there were before. But Jem also was talking there about more competition. You know, for a big cash management bank like Standard Chartered, I mean, it sounds like there's a great opportunity and it's a great place to be in. But there is the competitive landscape of managing cash and payments has changed dramatically, hasn't it, over the last decade, particularly over the last couple of years. So what does the cash management business look like in the regions that you're responsible for and operate in? And what do you see as the opportunity there?
Sure, thanks, Simon. And I like what Ritesh said about cash, not cashless, but less cash. So I pulled out a number that the cash in circulation globally still is $7.6 trillion. So there is still, and this is just physical cash that people use for transactions. And if you look at my title, I cover Africa, Middle East, and Pakistan. So all of these markets are extremely cash dependent, but then some are doing better than the others. I think that's where we need to call out a few markets. So first, I'll probably take a global view and say that, again, I think Ronit spoke about a lot of the parts of the world where it's better versus the worst, but I generally think that the BRICS economies are doing well on the cashless agenda, even though, and the base of population is very high, whether it's Indonesia, India, China. So all of them have an intermediate. The UPI is a success story everybody talks about, and it's an account-to-account story. So what they're doing is disintermediating banks, disintermediating wallets in some cases as well, but getting us to the point where people can transact from their accounts. South Africa is looking to do something similar with PayShap. So I think BRICS is way ahead. Then you have the Eastern African economies and Ghana, so Tanzania, Kenya, Ghana, which are the mobile wallet economies. And those guys had moved away from cash long back because it's a very unbanked population. Cash is difficult to carry. There is an expense to carrying cash as well because these are unsafe markets relatively. So we see there's a lot that happened in those markets as well in terms of wallets. Now, let's move to Nigeria, which is a case that everybody talks about now because their cash usage went down probably from 85% to 60%. So that is the number of transactions that used to happen in Nigeria. Again, another country which did demonetization similar to India. They have NIBS, which is an instant payments platform that works very well. They have wallets available. They experimented with something known as e-Naira, which was onshore CBDC. That didn't work so well, but they've tried every alternative because that market is extremely cash dependent, pretty unsafe, and they've had a lot of success there as well. So generally, from our markets, I feel these are the ones that are doing better. Pakistan is a very large market, so it's very difficult to move away from cash in that market, but they've introduced a lot of, including an instant payments platform. They have wallets available there as well. They have something known as IBFT available. So they have a lot of channels, but the channels are not speaking to each other as much as they should. And finally, I touch upon the UAE because we are in the UAE. The UAE has launched a very ambitious program, which is the NPSS program, which is the National Payments Redesign. And as part of that, the intention is to get QR codes, request to pay, direct debits, everything into it, and eventually take away cash from the economy. Again, a very tourist-dependent economy, and tourists in the GCC normally spend in cash, so there is going to be always a challenge, but some very ambitious plans over there. So that's how the region that I cover is evolving.
Thanks, Viplav. Just a quick follow-up question. For a bank, I mean, maybe Ronit, you want to take this also at the city level. For a bank like yourselves, is cash management, is it now a kind of a business product line in its own, of strategic importance in its own right, or are you taking it increasingly more like a fintech, or a company like Sailesh is, where it's actually the data that matters, so that you can layer on services? What's the way that you look at this
So I'd borrow
business?
from what Ronit said, that people keep saying banks are going to shut down, but we still continue to be in our jobs, have the fancy titles, everything. So that continues, right? So the reason for that is, one, the trust is unbeatable, what the bank provides in terms of trust. In terms of ESG, from a governance perspective, what banks do in terms of financial crime compliance, what value they add over there, and the ability of banks to integrate with some of the financial services intermediaries, and then still face off to the client, that's unparalleled. So in our bank, cash still continues to be the largest business line across all the business lines we are in, largely driven by some of the interest rate actions as well, but also from the complex solutions. And where the differentiator of banks lies, and whether it's us or whether it's Citibank, the differentiator lies in being able to bring together the whole journey of the client together, because we touch the client at different points. And now APIs make it so much possible to touch any part of the journey at any instance. So the differentiator is to be able to get into that, still use our reach, still use our network, our cross-border piece, and then get other players for each as well to add to that. So yes, still continues to be relevant. That's why I have my job. Yeah.
Quick word from you on that, Ronit. Yeah.
Sure, maybe just to zone in or hone in on this, where the banks have a dominance is really in one area, which is B2B payments. In every other area, particularly B2C and C2B, that's where the banks need to usually partner with fintechs. And the challenge for the banks is that C2B and B2C segment, while tiny in total flow terms, is very rich in margins and growing very fast. So if you just give you a couple of numbers, right? Overall cross-border payments, 97, 98% of the world's cross-border flows is B2B. This is Stanchart clients, JP Morgan, HSBC, Citi clients just pinging trillions of dollars, and I mean trillions every night. So every night, because it's batch processing, there's about 5 or 6 trillion that gets pinged between Citi clients. These are the biggest world multinationals. That is 97, 98% of cross-border flows. There's about 2% of flows, but much higher of revenues, double-digit of revenues, which is B2C and C2B. And that is growing, the C2B stuff is growing double digits, and the B2C is growing high single digits. The B2B is not growing. It's growing low single digits to mid single digits. That is the challenge. So banks still super relevant, but relevant in spaces that aren't growing.
Let me just come to Sailesh first, because he's been very patient and we haven't got a lot of time. Sailesh, Geidea, is scaled, pretty successfully across this region. It's not necessarily a company that everybody on the panel will know or in the audience, but it's growing fast, focused on merchants and payments there. For you, is cashless just a byproduct, or is it something you're sort of actively seeking? I mean, tell us a little bit about your kind of view of why cashless matters, or how you view this whole area.
So let me break it into a couple of sections, right? First of all, it's these days it's very fashionable to say digital, cashless, or fully card-based, right? But it doesn't happen that way. And the reason it doesn't happen that way is you got to look at the whole ecosystem of the payments, right? How do they move? How does the money move from one end to the other, and where is it actually landing, right? So if you look at any economy, you got to split it into 2 sections, right? One is the domestic payments, and second is the international payments. And within the domestic payments, then you look at consumer, and then you look at B2B, like what Ronit was saying, right? Now, the only place where the largest momentum that has happened in the B2C segment of domestic payments within the consumer segment. So when you look at the 4 segments, the digitization is happening only in one quadrant of it, right? Why is it not happening in the other quadrant? Well, there are a couple of reasons. And then I'll explain you the role of Geidea as to why and what we are doing and what excites us the most. So fact of the matter is that today, the banks and the issuers, and in most of the cases they're the same, their largest revenue generator happens to be the international payments, both from a remittance point of view as well as from a usage point of view. When their card member goes and uses the card overseas, that's when they get the highest interchange, they get FX revenues, and they will try and they would like to maximize as much revenue as possible. Now, that also acts as a deterrent for the user, because he's now saying, hang on, if I use my card, I end up paying 3.5% more for the same transaction. But if I use cash, I'm going to get the same transaction cheaper, right? At the end of the day, he's come to a holiday or a business trip on a budget, and he wants to save money on that budget. So it acts as a deterrent. From the acquiring point of view, when you come to it, it is the most unprofitable transaction because the interchange is the highest. So for me, that international transaction doesn't excite me until and unless it's a DCC-based transaction where the consumer will end up paying another 4% of commission to me as an acquirer for the same transaction. Then comes to the point what Ronit was saying about the B2B, right? B2B is very exciting. And today, when I look at how Geidea is operating, we are trying and we are working very hard with some of the largest FMCG companies, B2B players, and we are trying to shift that huge volume in billions to move them from bank bill payment business onto a card-based business, right? Today, the interchanges are the lowest on the wholesale business. Supply chain management attracts the lowest interchange. And the vendors want to be paid faster. The issuers want extra credit days without paying for it, like any other consumer. I want it for free, right? And for me, when I look at the margins on my merchant service fee, I attract the highest margin on that transaction. So what we from Geidea perspective are doing is looking at these large companies like Nestle, your Johnson & Johnson, Coke, and we are trying to move those transactions from interbank or from bank transfers onto the card. So there is a value proposition. If you look at it, it gets well balanced. The purchaser gets extra credit days, the buyer gets his money instantly, and ultimately the money goes into the bank anyway, so they enjoy the float. So the value proposition from all the three players is very well balanced. Now, in addition to that, what we are doing is we are making sure that the fourth quadrant that we are playing in, where we maximize or make sure that the terminalization of the merchant happens in the easiest way. Today, the merchants have to do immense amount of documentation. The amount of paperwork involved to get this one terminal is not funny. And we are trying to automate as much as possible, like eKYC. Do you really need to give me all your documents while I can collect it through an eKYC portfolio? Do I really need to go and take 6 months of your bank statement? Do I really need the bank to stamp it? So we are easing it up and making it very convenient for the merchants to ease that process and get access to the terminal so that he can start accepting plastic. Now, on top of that, on the device that sits on his till, we are trying to give him access to as many applications as possible. So his dependency on other applications and other processes reduced, and through the same device, he can accept closed loop wallets, open loop wallets, digital wallets, cards, contactless, and also do his electronic cash register operations. So single device, multiple operations, focus on the B2B, and shift some funding over there. The rest is driven more by the banks and the fintech, the banks on the other side, and that is a play that we depend on them to change.
Thank you for that, Sailesh. You raised an interesting point there about partnerships. Did you want to come back on some of the earlier stuff, Jem, just quickly? We're going to go to the audience for a question.
Yeah, maybe. I just wanted to complement what Ronit mentions about the B2B payments, C2B payments, and C2C payments on banking. We recently conducted a survey among more than 4,000 consumers of the banks and more than 2,500 SMEs. These are all bank customers. And what we have achieved was like only 44% of these bank customers choose their banking channels to do cross-border payments. And 56% are either using some fintechs or standard MTOs to do these. And when we ask why you are not using your own banks, the main, let's say there are a couple of answers, but the main reason is that the hidden fees and the ease of payments. So, and the key takeaway was 85% of the surveyors were telling us that if our bank solved that hidden fee problem and ease of payments problem, we will turn back to our banks to make C2C and C2B payments.
Thanks for that, Jem. We have a few more minutes left. We can take one or two questions if there are any. Just if there's a question, please raise your hand. No? Very good. Talk about partnerships then. A big part of the ecosystem world, the digital financial services world, is increasingly reliant on partnerships. Driving cashless is also about regulation, isn't it? It's about making sure that the regulators themselves partner amongst themselves. Give us a sense, Viplav, perhaps of the strategy that you're taking with regard to partnering with innovation. How do you view that kind of ecosystem fintech play at your end as a big bank in multiple emerging multiple fast-growing markets?
So we do it through two ways, Simon. There is the ventures arm that we have as well, and the ventures arm actively invest in a lot of those solutions which are banking challenges for our underbanked population. So they would normally take up one of the ESG, the UN goals, or they would take up one of the financial intermediation goals, and they'd work on it. So we have the ventures arm that we work with. Now, in terms of how we directly also partner with fintechs, there are many streams we could do that. There is, of course, the low value cross-border that Ronit spoke about. There's also the whole world of embedded finance, where we can play an important role as a strategic partner, as a provider of liquidity, as a provider of a specific service. So in embedded finance, I always feel that that's where we are integrating most with fintechs. We are coming up with programmable payments. So those kind of things which were inconceivable some years back are happening as well. So that is another area. And then the final one where we're doing a lot of work with fintechs is the supply chain piece. So SME financing, generally because we are also a strong trade bank. We also work in all the emerging markets. And supply chain finance solutions always rely on proximity to the client, proximity to the spokes. And that's where the fintech partnerships become very important as well. Did you also want me to touch upon what we do with the regulators, or was the question?
You've got something quick to say about it.
Okay. So we work, for example, with the DFSA very closely, with the ADGM very closely over here, just as examples. We've also been advising the Central Bank of Nigeria, the Central Bank of Tanzania, the State Bank of Pakistan, all of these, in terms of how they can make it easier for fintechs to do business in the country, how they can put more checks and balances, and how they can create more interoperability and a more level playing field in the market. So that's the kind of work that we do with the regulators, because we're a very old and established bank in most of these markets. So regulators naturally seek us out for those informations.
Thank you for that, Viplav. Ronit at Citi, I mean, what's the view and the kind of the ecosystem play, the innovation and integration with fintechs and innovating companies?
Absolutely. I think I'll just echo what my colleague at Stanchart said. There's an element of frenemies here. There are things that fintechs can do better, and fintechs and banks need to work out a way to manage that process, because it can be really hard for fintechs to collaborate with banks, just because of the nature of banks. So I always tell my friends who run fintechs, you need like a few friends inside the bank. And ventures can help and innovation units can help, but just being plugged into ventures and innovation units can mean you get stuck in a POC type sandbox environment. So you need to have a sponsor or a friend in the business, in the division, the cash, payments, whatever. But definitely the future is one of collaboration, where there are certain things, as particularly as payments, it's already happened. Payments is like every other aspect of technology. The big mega trend the last 10, 15 years is the consumerization of everything, including the consumerization of payments. And fintechs often, or our friends in the big tech world, they are better sometimes at the consumer aspects. What banks are very good at is high value, high volume, basically fidelity, like just making sure, and the fintechs can have the coolest APIs and front ends, but moving $6 to $10 trillion a night, which is what the big three banks in the world do, that ain't easy. And sometimes legacy has a role to do that. Just like, you have Sheikh Zayed Road, you have the E311, you'll have hovercrafts in the future probably, and whatever, flying taxis, and you've got a metro, and you've got multiple ways of moving around Dubai, right? It's the same for payments. There can be multiple ways of moving money and value and messages, and there'll be hopefully a way to partner in that.
Thanks, Ron. I like that. Just a quick word from you, Ritesh, on at the level of the G20. Is that the view that's being taken? I think most marketplaces, most regulators understand that innovation is important, not just because they need to innovate because money is changing, but also because of the value, the economic contribution. Is the G20 seeing that sort of cashless, a cashless drive is a desirable, important goal?
Definitely, I would echo what one had said around there are different ways, and it's about the consumerization as well and the commoditization. That's what we are seeing in the payments. Just to give an example, like what we call it as in payments, it's a merchant discount rate, which is basically the merchant pays, right? That is becoming, merchant pays the cost. And in some of the economies, that is becoming zero. So when you think from the fintech player or the other players, they do not have any interest in processing these payments, because they are not going to get anything out of it. So it's all about the commoditization of the merchants. On the other hand, from the G20 perspective, there's a very clear priority area, that is cross-border payments, financial inclusion, digital financial services, building up the DPIs, which is the digital public infrastructure, as well as building a fund, a global fund to build the DPIs, the digital public infrastructure, because it's a quite significant challenge for smaller economies to build the infrastructure by themselves. So just to give you an example about Cambodia, when Cambodia was looking forward to build something like UPI and the identity ecosystem, they got a bill of around 50 million, the quotation. It's quite a lot of money. So what they've gone ahead, gone to a fintech, brought them on board, build a system which costed them a 1.5 million, which does the job. So the focus is around how we can come together globally, build a fund which can support the various economies in putting the infrastructure around.
Thank you very
Thank
much.
you.
Please give a warm round of applause to our panelists. Very good. Thanks, guys. We'll take